Good evening and thank you. I'm Vaishnavi Vaidya on behalf of AKMIL Strategic Advisors. I welcome you all to the H1 FY26 earnings conference call of Freshara Agro Exports Limited. Today we are joined by Mr. Junaid Ahmed, Chairman and Managing Director. Good evening, Junaid, sir.
Good evening, Vaishnavi.
Now I would like to hand over the call to Mr. Junaid Ahmed to share insights on the company's performance, key operational highlights, and its strategic outlook. Over to you, sir. Thank you.
Yeah, thank you. Good evening, everyone. Thank you for joining Freshara Agro Exports Limited half-yearly earnings call. It is a pleasure to share the progress we have made during the first half of this financial year, a period marked by strong operational momentum, disciplined execution, and continued expansion across our global footprint. H1 financial year 26 has been a defining period for Freshara, delivering robust growth across revenue, profitability, production, and exports. Our total income stood at 140 crores, registering a 31% year-on-year increase. Our EBITDA rose by 30%, close to 2.437.81 lakhs, while our PAT grew 31% year-on-year. EPS for the period was 6 rupees 35 paisa. Margins remained healthy and stable, with EBITDA at 18% and PAT at around 11%, reflecting improved operational efficiency and a favorable product mix. Our export performance has been equally strong, demonstrating the depth of global demand for our products. Gherkins grew at 46% from 9,294 metric tons to about 13,600 metric tons. Baby corn increased by about 64%. Banderillas surged by about 147%, driven by strong acceptance in new markets. Chilies and jalapenos recorded about 45% growth. This performance is supported by our enhanced production capabilities. Full container load shipments increased from 685 containers to about 1,000 containers, taking our total production from 10,000 metric ton to 15,000 metric ton on a year-on-year basis. Our second processing unit and packaging unit is now fully operational and is scaling efficiently and contributing meaningfully to our volumes. On the geographical front, our export markets continue to strengthen and diversify. Russia expanded to about 35% of our export share in the first half, compared to about 18% in the previous year. Spain, Iraq, Chile, Italy, and the USA continue to show steady recurring demand. Our top 10 global buyers have increased our repeated orders, with several customers significantly expanding procurement. This growing and diversified footprint reflects Freshara's position as a reliable global supplier, backed by an integrated, efficient supply chain. A key development this year is the expansion of our multi-product strategy. We introduced premium pickled beetroots designed to cater to global preferences and leverage rising demand for health-oriented probiotic-rich foods. With strong nutritional benefits, versatile usage, and higher acceptance across retail and B2B channels, beetroot is poised to become an important value-added contributor to our future revenue mix. At the core of our operations remains a strong agriculture ecosystem, a network of over 4,000 contract farmers across 22 districts, supported by sustainable farming practices and a long-standing relationship. This trusted network of farmers remains central to our Freshara's consistent quality and supply. As we move into the second half of financial year 26, our strategic priorities remain clear. Strengthening profitability through scale and operational excellence, expanding market share in key export geographies, accelerating multi-product growth, including beetroot and upcoming value-added lines, deepening global B2B and D2 penetration. The first half has laid a solid foundation for the year, and we believe Freshara is well positioned to sustain this momentum, driven by growing capacity, diversified product portfolio, and a healthy demand environment. There is another announcement that we are looking forward to acquire a company in Spain. It's one of the largest processor and producer and supplier of olives in Spain, and it can generate a lot of export market for us. This acquisition, as we speak, the process is in progress, and by December 11th, I think we should have a favorable order in our hand. So this acquisition will help us increase our product portfolio as well as our global reach to more than 100 plus countries across the world. Thank you. Shreya, you can start the presentation, please.
Yes, sir. We'll start with the presentation.
Is my screen visible?
Yeah.
Okay, we'll start.
Please, the next slide. Hope everybody has been able to go through our presentation. I'll just run it through quickly. As you all should be knowing, we are ranked in the top 2 or 3 food process exporter from India. Majorly, we are ranking almost number 2 in gherkins and other processed vegetables. Next slide, please. Next, please. As I just mentioned that we are growing with our farmers. We are now the top leading exporter from India for gherkins. We have done more than 125,000 metric tons of gherkins and other product supplies across the world. We have a existing order book of about 91 crores, which is going to support us for the second half. Our vision is to bring authentic pickled gherkins to the rest of the world to enhance the acceptance for Indian gherkins. And our mission is to become the leading producer of processed vegetables from India. Next, please. Here are some key business highlights. We are a decade old in the business. We do close to about 7 to 8 vegetables, processed vegetables from India. We have 2 units. One is an EOU and one is a DTA unit. We support more than 4,000 plus farmers. Our order book is pretty strong. Our procurement is the strongest in the industry. We cover more than 22 districts, and our farmer base is about more than 4,000 plus. We export to about more than 40 or 40 plus countries across the world. Next, please. This is a timeline of our progress through the years. Last year we got listed, and the previous year we had started off construction of our new unit, which is now operational. So now we have 2 production units in Tamil Nadu, which help us increase our exports from India. Next, please. This is our process which we follow from our procurement to our production and to our shipments. Next, please. The highlight of our company in the Indian agri industry is that we have a very strong farmer base. We cover, as I mentioned, more than 4,000 farmers, and we do contract farming. We ensure that we have good yields from our farmers. We ensure that we have pesticide-free products. We ensure that the yields are improving on a daily basis. And we grow across more than about 8 vegetables in India. Next, please. This is roughly our sourcing network, which is spread across 3 different states. As you know, gherkins is majorly grown and sourced from these states, and we have a strong footprint in all these districts. Next, please. See, we do a certain quantity, which is like more than about 35,000 metric tons. It is all possible because we have a very strong, strong supply chain, which ensures that right from the farmer harvest to our factory and to our shipments, we ensure that timely shipments are done, and we ensure that our customers are pretty happy with us. Next, please. See, ethical farming initiative is nothing but what we are trying to do is we are trying to improve the farmers' yield, the farmers' income. We are trying to ensure that the usage of water is reduced, the usage of chemicals and pesticides is reduced. We provide all the necessary inputs and supporting materials to our farmer so that his yields are much better than the previous years. And we hope to improvise this as we go ahead. Next, please. As I just showed you that we are spread across 3 different states and about more than 22 districts, which ensures that we have round the year supply of gherkins and other vegetables, unlike any other company where which just concentrate on one particular state. We have a wide supply network which ensures that we have consistent supplies and the risk of different climatic conditions is mitigated. Next, please. We are present in more than 40 plus countries. Our major export markets are Russia, Europe, and USA. We have two state-of-the-art facilities in Tamil Nadu. We are an EOU as well as a DTA unit. Next, please. These are some of the countries where we are present, more than 40 plus countries, and increasing every year. Next, please. This is our revenue country-wise bifurcation. You can see that Russia has been the leading consumer of gherkins, and Spain is equally catching up. We have a very large market in Spain. The top 5 countries include Italy, Chile, and Iraq, Russia, and Spain. And this year, there has been more sales to Russia, followed by Spain. Next, please. This is a simple summary of the 2 production units which we have. The first unit was established 10 years back, which was established with the idea of doing only industrial packaging. Today, we do 3 different packaging types there. The second unit was to cater to our growth in our exports. This new unit is now fully functional, and we are trying to integrate as many products as much as possible. Next, please. As you also know that we are doing gherkins, baby corn, jalapenos, chilies, green peppers, corns. We do 3 different types of packaging, as we mentioned. Our growth is about close to 30% year on year. It's pretty consistent. Our margins have consistently improved through the years, and as we increase our volume sales, we will be trying to achieve better margins. Next, please. These are some representations of our products, which we white label products, which we do for a lot of customers across the globe. Though we don't have our own brand, we ensure that any product, if you fetch in Europe or USA, you may find a product from India, and it may have been packed by us. So the relevance is very high. Going forward, we also want to venture into white label, in our own brands. Next, please. This is a new addition, beetroot. This is going to US market. The products which we majorly supply are all for people who are pretty much health conscious. Beetroot also, as you know, there are a lot of health benefits for it, and this is a very large market, which is India has recently started manufacturing. Probably one of the only countries which is now producing, packing, and sending it to American customers. We have a large scale requirement for this, and we hope to enhance this product supply from our factory. Next, please. These are the various packagings which we do: the industrial, the retail, and the HoReCa packaging. We do right from the bulk packaging to the white labeled products which are reaching our customers. Next, please. This is how our revenue is contributed in different products. Gherkins is a major contributor, and as we increase our revenue and as we add more products, there are other products which are catching up. There's a lot of demand for baby corn and the bandillas from India. So we are among the top suppliers of these products from India, and there is consistent growth in these products, and this will help us achieve a higher revenue in the coming years. Next, please. This is again the summary of our exports. Last year we did about 30,000 metric tons. Again, an improvement of about 30% on the previous year. This year we've done close to 35,000 metric tons. Next, please. These are our different certifications which we are accredited on. Next, please. Some of the awards which we have regularly, secured. Next, please. Just an oversight of our market. India happens to be the top supplier of gherkins. The overall market for gherkins, pickled products, is growing at about 4 to 5% year on year. Indian exports are growing about 9 to 10% year on year. This is majorly specific to gherkins, but there are other products as well which are not covered here. but there's a lot of requirement and a lot of growth. As you know that European and the US countries are now shifting to ready-to-eat products. They are depending more on imports from India. So this helps us grow more and export more. There's a lot of demand for gherkins catching up, and it will help us, secure the top spot. So, next, please. As I mentioned, the graph shows that India happens to be the highest exporter of gherkins. It's ranked among the top 5 countries. It has a large market share, and it has consistently grown. Next, please. Just some financial information about the last half yearly. Next, please. Our revenue stood at 140 crores, which is a 31% growth from the previous year. Our margins have also remained steady, and we are at the PAT is also about 31% higher than the last year. Next, please. This is the analysis compared to the previous half yearly. You can see that there's a 45%, 46% growth in gherkins, or 64% growth in baby corns, and a large growth attained in bandillas. So we have consistently increased the volumes, and I think our quantities have also gone up by 40-45% average. You can see the quantities here. It's roughly about 15,000 metric tons, which we've exported in the first half. We expect to achieve about 35,000 metric tons the year. Next, please. This is about the top 10 buyers. They are spread across. They've consistently purchased more than the last year. And country-wise, you can see that Russia has increased. Our sales to Russia have increased in the last year. Spain is in the number 2 spot, and we have a lesser exposure to USA. And annually, if you see, it will be less than 10%. Iraq and Italy are contributing higher sales in the last year. Next, please. This again talks about our revenue and our PAT margins, which we've discussed in the previous slide. Next, please. Our debt has considerably reduced. We are exporting higher numbers than the previous years. Next, please. Next, please. This is our leadership team. Next, please. Just a summary of what we are. We function very efficiently in this industry. We try to ensure that we are having a very quick turnaround time. We also ensure that we do the best products in our factories. We focus on competitiveness, efficiency, and innovation, ensuring that the cost is curtailed, and we are better in numbers always. And we are also trying to have a repetitive customer base. More than about 75% customers are stay with us. There is very few attrition with our customers. That's because we ensure that our product quality is very high, and our timely supplies are maintained. Next, please. Again, a strategic strength. We have a very good business model functioning on a daily basis. It ensures that we have a very good supplies of raw material at very well negotiated prices. We ensure that our risks are covered, and our prices are always helping us grow and achieve better numbers. We are also focused on ensuring that we are up to date with the market, to the different countries, their requirements, their certifications. We focus on getting the latest of certificates so that we are welcomed in different countries. And as I mentioned, we are consistently trying to improve our product portfolio so that our numbers help us grow. Next, please. Yeah. Again, we have worked out different strategies, and we hope that in the coming years we will be leveraging this to achieve more customer base and expand our portfolio. We also want to consistently grow our farmer base, which we've done in the past. I mean, the numbers though we mentioned is 4,000 plus, it's close to 5,000 now. We want to double it in the coming years. At the same time, we want to ensure that we follow sustainable practices. We try to improvise on yields, and we ensure that the profitability of the farmer is improved, as well as he maintains his interest in the crop. Again, we try to reduce cost, improve efficiency, and deploy as much mechanization in the process, so that our numbers are good. We also are trying to now reach globally, just not with gherkins, also with other products. Next, please. Freshara, as I just now mentioned, we have a very strong market position in India. We are among the top-rated export-oriented units from India. In the last 10 odd years, we've consistently grown. Last year also we've grown at about 30%, and this half yearly also we are on this almost the same number. We've done a large quantity across different countries, and we continue to expand. We follow ethical farming practices, and we ensure that our growth is along with the farmer. Our two processing facilities help us increase our production capacity, so that it helps us in our growth. We are trying to add more products to our portfolio, so that we have a varied bouquet of products, and not to only say that we are gherkin exporters. We are exporters of different processed vegetables. As I mentioned, we have a very robust supply chain, which ensures that products reach our customers well on time. We are committed to social welfare. We support our farmers with technical assistance, high quality seeds, fair compensation, and we also support with their social and economic upliftment. Our future expansion plans is to enhance production capacity, include new technologies, and expand our global market presence. Next, please. Yeah, thank you. Vaishnavi, we are open for questions.
Brilliant, sir. Investor, the floor is open for question and answer session. I request you to raise your hands or drop your questions in chat box. Thank you. So first question is from Mr. Nikhil Singhania. Yes, Mr. Nikhil, you can go ahead and ask the question. Mr. Nikhil, you can.
Hi, sir. Good evening. Am I audible?
Yes, please go ahead.
Sir, I want to understand from you regarding raw material availability. How much space is available there to grow on procurement side? How we plan to grow there with our increasing capacity? Is there any challenge on procuring raw material due to area or location restriction?
Yeah, thanks for the question, Nikhil. Nikhil, as I mentioned in my presentation, we are spread widely across 3 different states. We do not corner ourselves to one growing area. Our acreage through the years has increased to a great extent, and there is a lot of availability also. We grow to our strengths, and every year you can see our quantities have increased from last year about 30,000 metric tons. I think we should be doing about 35,000 metric tons. In the last half yearly, you can see we are already 5,000-6,000 tons ahead. So it clearly pronounces that our sourcing capacity is probably the best in the industry, and this has helped us, export this product around the year. We don't have a seasonality problem. Since we are in 3 states, we have about 9 or 10 months of regular arrivals of crop, and we also have multiple crops. So there is no gap in production, and there is very good chance of actually tripling the sourcing capacity itself. On the production front, we have a new plant which was just started in January. We are fully operational now, and we are able to achieve 50 to 60% efficiency at the moment. December, January, February, and March happen to be our major growing and procuring seasons. This is where we are expecting to push the plant to at least 75-80% of productivity. This will help us do more retail packaging, which we have consistently done in the last year again. So we are now targeting large retailers. So yes, on the production front, we are good to go for at least 1.5-2 years. Alongside, we are also trying to enhance, additional lines which will help us do additional products. So this way, we are trying to focus on the future. We are not only trying to produce today, we are trying to plan for the next 12 to 18 months itself.
Very well explained, sir. And the second question is, sir, what are the climate risks to our products that we deal in?
This crop to India is about 35-40 years old, Nikhil, and we grow this crop exactly after the monsoon or exactly after the summer. So the period between, the summer and the monsoon is good 3 months period, and the crop is also a 3-month crop. So from seeding to crop generation to harvest, the total period takes about 90 days. So before the monsoon, the crop ends, and immediately after the monsoon, we start a new season again. So, I mean, we are so well practiced in this format that, in fact, in southern part of India, there are no adverse climatic conditions. So even if there are extended monsoons or even if there are very hot summers, we don't see a climatic problem for the crop. And in the last 5 years, 6 years, it's been pretty much very consistent.
If I ask the last question, are we looking for any acquisition in India?
We have our focus to acquire some companies. We are looking for value. The acquisition has to come at a reasonable price and should provide us a leap in growth. So we are looking at while we are doing this exercise, we had an opportunity to acquire another company. So we've gone forward with that in Europe actually.
Thank you, sir. That's all from my side. Thank you very much.
Thank you. Next question is from Mr. Suyash. Suyash, you can go ahead and ask the question.
Hello, am I audible?
Please go ahead.
Sir, thank you for taking my question. My question was regarding the Spain's acquisition.
Sorry, Suyash, I cannot hear you.
Your end.
Suyash, I cannot hear you again.
Suyash, sir, can you speak?
Hello.
Yes, please go ahead.
I wanted to know about the acquisition in Spain. Like from your end, how will be the transfer to Freshara Agro? What will be the valuations for that?
Sir, I do not have the exact numbers at the moment. I have a period up to December 11 where we are drafting this on an official communication. We will share with the investors and the NSE.
Okay. So I just wanted to know about the if there are any if there are any liabilities or losses, will that be carried forward to the current company or how will that work?
Let me explain. I'll just put a brief on this. We are going for an asset purchase. We are not taking over any liabilities because this company has submitted itself in voluntary bankruptcy. So we get the real estate, the machines, and the employee contracts. We are good to go once we acquire the machines. I mean, once we acquire the assets, we do not carry forward any liabilities.
Okay, that's great. And I had a question regarding the second plant that you have just started last year. So I wanted to know what is the production capacity of that particular plant and how much it contributes to current revenue.
The production capacity in total, the plant can do about 75 to 100 metric tons in a day. It can do about currently it can do about 6,000 retail jars an hour. That roughly translates to about 30 tons for retail packaging separately. So at the moment, the plant is contributing, about 50% of our revenue, I think, roughly. As I mentioned, again, the plant is at 60%, 50 to 60% operational capacity because the team is new. We have to train them in food products. Again, hopefully by the coming months, we should achieve, at least try to achieve 75-80% of its production capacity.
Okay. And sir, I have a last question. Is the company planning to do some retailing in large supermarkets in US like Walmart, or do you have any plan like tying up with any global supermarket chain?
Yes, we are already in plans to do that. There is groundwork which is already happening. We have appointed exclusive agencies which are working with us to achieve these contracts, and I think this coming year we should have some good names in our kitty.
Okay, sir. Thank you. Thank you for the detailed answers and taking my questions.
Thank you.
The next question is from Mr. Vishal Shah. Mr. Vishal, you can go ahead and ask the question. Mr. Vishal, you can unmute yourself and ask the question.
Is that better?
Please go ahead.
Yes.
Okay, so congratulations to the Freshara and the entire team for a steady set of numbers year on year, and also best wishes for the new acquisition of the Spanish plant. So my question to you was, how will the acquisition of the Spanish plant change the outlook of the company, the face of Freshara? In the sense, how will this help you enter markets like, enter more aggressively markets like USA, Canada, and what will be the revenue guidance that you would give top line as well as margins for the second half and for the next 3 years, if possible? And third question was, what will be the current size of the company, the plant in Spain, and the margins, if available?
Okay. The entire idea of acquiring this company is to have a strong footprint in Europe. Olives is completely a different ballgame. As you know, it's a very large product. It's a high revenue potential product, and it has great spread across the world. I mean, more than 100 plus countries can already consume these products. The volumes are pretty large, and Spanish olives are a delicacy. Everybody likes Spanish olives. I mean, in fact, we would have come to know olives from majorly from Spain. So our customers who were already importing gherkins do about 60% of olives. So they are majorly into olives and about lesser into gherkins. And they are majorly into domestic market. So once we go to Europe, Europe is liked by many countries like USA, Russia. Everybody wants an European product, and everybody wants a Spanish olive. Large supermarket chains, everybody buys Spanish olives, repack it, or they buy from brands in Spain. The particular company which I have purchased has a good number of brands registered in the name. It's a pretty famous company, and it has a legacy of its own. Was a very good opportunity, so I thought, if not now, when? So it helps me hopefully double my revenues, which I'm currently doing. It helps me go very deep into the US and the Canadian markets. It helps me. I have a ready customer base. As I mentioned, the existing company does not do more than 3 or 4% of exports. So we go in as a strategic, something like a strategic partner. It's saying that, let us export you instead of being very, instead of facing the local competition. Local competition is any day higher. So when we take this product globally, we have already we have a very good response from all our globally wide customers. They want us to start supply soon. They know that when we enter this market, we are going to change it a bit. So everybody is looking forward to it. On the revenue front, I mean, we have only about 3 months from the current year or the new year, wasn't the year ends at December. This financial year, it may not reflect much, but I think the next financial year, FY26-27, we should be able to get at least 200 crores of additional revenue from the plant. The plant is capable of doing at least 400 to 500 crores of revenue. There are three different plants in which we are taking up. One for the olives processing, one for the olives production into different packs, and one is a logistic unit. So it's a very decent size. You can say they are very equal to what we are in India. The synergies are pretty much same, and the aggression remains the same. So yes, in the next three years, probably down the line, I'm targeting to be a 1,000 crore company. So this acquisition will help me scale this height.
Sure, sir. And what will be the capacity in terms of tonnage, metric tons, with the new plant in Spain?
The new plant in Spain per day can do about 55 to 60 metric tons in a day. They can pack retail packs per day at about, it's about roughly about translate into 3 or 4 20-foot containers. So it's a decent capacity.
Okay. Thank you. One last question, sir.
Yeah.
So keeping in mind the currency fluctuations, the euro is at $104, has crossed 90. How does Team Freshara manage the fluctuation in the currency? How does it ensure that the revenue is not affected?
Sir, a retreating rupee and a strong dollar is always beneficial for the exporter, as you know.
Yes.
This translates into good forex margins for us, helps us in being very competitive, being really aggressive, because we have a natural, a natural help happening from the other side. Third is we try to maximize this by ensuring that our currencies are hedged. At least we protect the downside, and the upside we try to get a premium by doing forward contracts. So this always helps. A weakening rupee always helps an exporter. And I mean, we have a good 4 months period where most of our revenues come in. So this 4 months is going to be really helpful. We can be very aggressive in our pricing, sales, and help achieve a better top line.
Understand. Thank you. I'll jump back in the queue. Thank you for answering my questions. All the best.
Thank you.
Thank you. Next question is from Mr. Dinesh Kulkarni. Mr. Dinesh, you can go ahead and ask the question.
Yes. So am I audible?
Yes, please.
Yes.
Thank you, sir. And a really good set of numbers, and congratulations on acquiring this Spain company. So my question is again on the acquisition. Like, can you just elaborate and what is the current ownership structure there, like of the acquired company, and who is acquiring it? Are you acquiring on your personal front, and then it will be merged with Freshara, or like what's happening here?
No. So in summary, see, Freshara will be 100% owner of the company. I have just as an individual participated in the bid. So the company would, as I mentioned, we are going to own 100% of the assets of this company. We are not going to carry forward the liabilities. Probably a particular mortgage where we carry forward, because the factories will be ours. It will be 100% subsidy of the Indian firm Freshara.
Okay, that sounds great, sir. And if you could just quickly tell us, like, what was the reason for the company to go in bankrupt? I know it may not be appropriate right now, but like, is it just the competitive pressures which you realized, which led to the, like, I want to understand the competitive pressures there. The companies, like, say, if we are operating that asset tomorrow, what are the challenges we are going to face? Like, any due diligence on that front?
Yes, we are already doing our due diligence on this. I've been there. I've assessed what has happened. It's a family-owned company, and the family wouldn't be in good terms to run it. That's caused a major downfall of the system. I wouldn't want to go very deep into it. Again, our advantage when we enter is that we can bring at least 40-50% of the production can be done from India itself. A lot of products go to Spain and are repacked in Spain and are supplied domestically. Production cost is higher in Spain, much cheaper in India. So you can calculate that at least 45-50% of localization is going to be done. This localization will help in the company being profitable at least by 4-5% on this alone, and it can concentrate only on olives. There will be no necessity to stock too much on gherkins. So the gherkin part will be handled by the Indian entity, and the olives can be exported from this company. This company has not explored its export options. There is a language barrier. They are not very comfortable in negotiating international. They are comfortable in being an importer. They've never been an exporter. So we are comfortable in being an importer. We want to substitute ourselves there and make them an exporter. In exports, as you know, there are decent margins. There are consistent margins. Because we explore global markets, we do not compete against 4 or 5 brand names locally. We have the world to reach for. We have top buyers in the world who buy this product. Probably, I mean, it's called a desert gold. Olives are called desert gold. It's somewhere it's a very niche product, very nice product, has a lot of value to it. It's just that how it is worked and how it is distributed among the customers with decent margins is where we want to be there, and we wanted to take it to the next level.
Sounds great, sir. On the same lines as you mentioned, so just two questions on the same acquisition. Are the assets in still good conditions to be used, and or how much kind of maintenance or capex is required on assuming after we take it over? And what are the, like, say, as you mentioned, it's a desert gold. So are the margins better than what we are having now, or like if you could just give some colors on that?
Export margins are somewhere around 15% for the product, but when you go domestically, it may not be that great because you compete on a shelf-to-shelf basis, right? The machines, the factories are all in very good condition. As I mentioned, I visited them personally. I spent some time there. I saw that they are much more efficient than compared to many Indian factories. Lesser people, more work is done. A lot of automation is there. A lot of mechanization is there. The SAP systems are good. The inventory control models are good. It's not a lot of crowd, but does a lot of turnover. So in India, it's the other way around, right? Because here affordability is high, there affordability is less. So wherever we can substitute on the cost, we want to do it. There's a lot of packing material which is very expensive, which is sourced in Spain and Europe. We want to substitute it from India and other countries where the packing material is much cheaper. So this exposure this company hasn't had before. And in my personal experience and expertise, and in my company's knowledge, we have a whole 360-degree advantage here that we can bring it in and make it a good performing unit.
Okay, that sounds great, sir. And on the last question, like we said, as you mentioned, that we have started a new production unit here in India, right? So it's mostly on the smaller scale and smaller size products, right? So how's this thing going on? Like you mentioned, it's 60% capacity operating, something like that. So when do you think we can reach, say, 100%, and what is the full potential here, and what are the expected margins you would expect?
It's a larger unit compared to the first unit. It can do, as I mentioned, close to 7,500 metric tons in a day. By 50-60%, I want to tell you that it's a new factory. It cannot jumpstart on the same day. We are now expertising on products, and we are bringing customers to our factory to understand the requirements and to match their taste requirements. So this we have achieved almost 60%, and one crop is over. We have another crop starting in December, and this is where we'll try to maximize close to 75-80% of our productivity will come from here. Then will come volumes which we want to do it from the coming financial year.
Okay, so last, can you just quickly give us a potential guidance on this year and next year in terms of both revenue and at least the capex? That's the last question.
Yeah, see, we are predicting about 30% growth compared to last year, which we have already achieved in the H1 also. So H2 would be close to 325 crores, roughly around the same. We should try to achieve that number. We'll have 3 months of the Spanish company's turnover, but we are still not in the clear of it. And from the next year we should have a consolidated number, and we are looking at close to 600 combining both the companies from India and Spain.
Okay, and on the capex front, sir, this year and next year?
This year there's not much capex involved, but we are trying to add a few production lines because we have added a new product. We don't run multiple products on the same production line. So there are some small requirements which we are doing time and again. Probably a very small capex may be infused with either by debt or by the funds in the company.
Okay, sounds great, sir. All the best. Thank you very much.
Thank you. Before we move forward to the next question, I request all the participants to strictly limit their questions to 2 each. Thank you. Next question is from Mr. Balakumar. So you can go ahead and ask the question.
Yeah, hello, sir. Congrats on the good set of numbers.
Thank you.
Sir, so from the public source, we have seen the acquisition price. I don't know whether it is speculation or something, so I don't want to quote the number. But on an overall sense, how would you like to fund the acquisition, sir? Funding the acquisition, as well as going forward, you will also have to invest on working capital and some capex as well. So what would be the total capital outlay, and how would it be funded, sir?
Yeah. There's a lot of speculation in the market. I don't want to comment on it because I have a December 11 cutoff where I can, get more details on this. There is no additional capex involved. I mean, there's a buyout of the factories, which is not very expensive, and we are working with our bank, and we are comfortable in raising debt. Our banks are also comfortable in funding it. We're on hopefully on the next stage of it, and we have a deadline until January, I think, where we have to fund this unit. So through an ODA method, we'll fund this purchase as well as the working capital.
Got it, sir. Understood. So the debt will be raised in India as ODA, and it will be used for acquisition there. Okay. Sir, and you mentioned they have a B2C brand as well. So what is the current split between their B2B and B2C split, and how would it be going forward, sir? Because all along Freshara has been a B2B brand. So now that company.
It's a very nice question. This company is 97% B2C. They have their own brands. They are a homegrown brand in Spain. Almost every citizen of Spain will know this brand, would have consumed this brand at some point of time in their life. So it's directly to the supermarket is where they go. Freshara's involvement in this will be to help them continue this presence in Spain, but also to branch out globally because their brands are very much wanted across the world. There are some importers who buy it locally and export it to different countries, to a different channel. But we want to have this authorized branding done in other countries as well because it's a very strong B2C brand in Spain. A lot of our US Canadian customers know this brand and are very much welcoming it to be present in their country. We can also do B2B business in all this. It's the same production method. It's a similar kind of a product, similar kind of a shelf life. So we will try to, use every opportunity. We are not going to narrow it down to a B2C company or a B2B company. We are, it helps Freshara become a B2C company and try to enhance the growth of the Spanish company and Freshara's presence across the world.
Understood, sir. Got it. Because the reason why I asked this question is, since you have mentioned they are of similar size, so and they are a B2C brand. So normally B2C, with economies of scale, the promotional and the advertising expense gets absorbed better. So with a 300-400 crore turnover, what kind of promotional spend is required to maintain the market or to grow at the pace at which you would like to? Because in Freshara we are doing 20% gross margin, 20 to 22%. So there at this size, whether B2C is margin accretive or your thoughts on it, sir? I'll just leave it to you.
B2C is never rosy as your B2B. B2B in the sense, yeah. I mean, I'll compare it to as domestic export to your domestic sales to your global export. Global export has a pretty steady margin where you don't have too much of headway. You have some headway in prices. You can charge premium to some countries. You can be competitive to some countries. Where in the domestic market, the prices are pretty transparent. You have to sell, for example, if your competitor is selling at 100, you cannot sell at 105, right? But in the global export market, it's not like that. You can, if your customer is in, has a very good stronghold, he may buy or he may pay a better price. So you have always this opportunity in exports. So we are very keen on, pushing this export zone to take off. The current contracts of the FMCG, I mean the domestic product will go on, but we want to, there's a lot of spare capacity. They are doing only, I think, half of what they can actually do. So we want to use that remaining 50% right away. We want to push them into production to start supplying to our global customers. So end of the day, I think this capitalization of export market will help us cover whatever the domestic costs are, and help us achieve similar margins. If not the exact number, maybe we should be close to 8 or 10% in a year, I think. So I think in 2 or 3 years down the line, we will strategize. If exports are fetching more numbers, more profits, we will concentrate more on exports. But it's a legacy brand. It's like a Dabur and Colgate in India. Nobody would want to let it go just because they have an opportunity. We would want to continue it and nurture it, and we want to be a top company in Spain. There are other acquisition options as well. So there are smaller olive companies. We want to somewhere team up, tie up, and grow a bigger base in Spain itself.
Understood, sir. Very nicely answered. So lastly, you have also mentioned about moving a part of bottling and production to India. So that way, I think it will also increase the margin. So just to understand, they are into olives. So growing there, moving it to India and packing it again and exporting, whether it will be profitable as currently?
Let me correct you. See, they do about 60% olives and 40% gherkins.
Okay.
So
Okay.
we want to specialize them in olives, and we want to take the load of gherkins. We are any day going to be cheaper than the European counterparts. We are going to do all the groundwork for them. We are going to have cheaper packing materials, cheaper raw material, because it's our own homegrown product. And we are going to help them focus on the export market. So this is where the capacity utilization will become available for the export. So this 30-40%, which they are now substituting for the domestic market in gherkins, will be utilized for the export market, and we will ensure that they don't have to stock anything, right? Because we are the growers here, we are the packers here. We have to just follow just-in-time requirements and supply directly to supermarkets, like how we are already doing for US and German and rest of the countries.
Okay, understood, sir. Thank you so much for answering everything patiently.
No problem.
Thank you. So we have few questions in the chat box. So the first question is from Mr. Jayamaru. What is the consideration for acquiring the Spain company? What was the revenue of that company in financial year 25?
The acquisition cost, I will not be able to explain on this venue. Hopefully by December 12th, we will be able to officially put it across in communication to everybody. The company, I think they are doing close to 200 plus crores in revenue, at almost at half functioning capacity. So we should be able to achieve it in the first year, and we should be able to grow it at 30-40% year on year, a similar fashion like how we are already practicing it in India.
Okay. Also, you wanted to know, do you plan to continue running the Spain plant of the acquired company?
Very much. It's very good asset, once in a lifetime opportunity, a very leading legacy brand in Spain. Anyone would die to acquire it. I have got the opportunity, and I'll take it forward.
Okay. Also, Mr. Neeraj had few questions. The presentation shows the second unit is fully operational with capacity of 75 to 100 MT and the retail packaging of 6,000 jars are. What is the current utilization of the unit 2 in H1 FY26? And by when do you expect to achieve optimal utilization? Are there any supply bottlenecks from farmers or logistic that may restrict reaching 100 MT a day?
See, we are very much capable of doing more than 300 tons of procurement. We just strategize as to how much is required. We try to source that much only. The new unit is running at about 60% of capacity. We are trying to do the learning part of it, the learning curve, and trying to develop products. So I think in the coming 4 months, being our major Gherkin season, we should be able to achieve at least 70 to 80% of efficiency. There's no dearth in supply. We have very good raw material source, and in the next year we should be able to achieve its full capacity.
Okay, and what is the targeted revenue mix by FY27, and how soon can non-Gherkin products reach 25 to 30% share to drive structural margin gains?
You're too quick on the question. Let me just read through it. Can you read it again, ma'am? Which one is this?
Yes, sir. It's from Neeraj. Second question: what is the targeted revenue mix by FY27, and how soon can non-Gherkin products reach 25 to 30% share to drive structure margin gains?
Every year, Gherkins is also growing at 45%. There are other products which are growing at also at 45%. So the share is comparative. We just have to see on values rather than the company share, because Gherkins is not letting us down. Gherkins has a long way to go. We are going to do a lot of market catching up. We are at 15% of Indian market. We want to gain another 5-10% quickly. So Gherkins is going to be very fast. The rest of it, we are going to scale it up as much as possible.
Okay. Mr. Amit wanted to know, with the acquisition of the Spanish entity, will Freshara now be able to export our flagship India-made products to Europe and US using the established Spanish brand? And if yes, how do you see this improving market access, pricing power, and overall top-line growth over the next 2 to 3 years?
Spanish entity will open us a world of opportunities. Spanish brands are welcomed by our American, Canadian customers, even by Russian customers. They all want Spanish olives. So we are going to launch these brands there, which they have not done it in the past, and it has a tremendous potential to grow. We are targeting a 30 to 40% year-on-year growth from here on.
Okay. So also Tejas wanted to know, where are we getting this other income from?
We have something called forex gains. As I mentioned, we hedge our receivables. We get a forward premium. We have about, I think, close to 2-3% benefit in that. We also have something called we have a subsidy from the government. It's called ROTTEP, where your taxes and duties are reimbursed by the government. So this goes and adds on to the other income.
Okay, we'll take next question from Mr. Sagar, but before that, I would like to request all to limit their questions to 2 each. Yes, Mr. Sagar, you can go ahead and ask the question.
Hey, Junaid, thank you for the update. I think most of the questions have been answered, and I put my hand up quite some time ago. But just to recap, we're talking about 600 crore kind of revenue for next year. So how are you planning to fund the working capital? That's question one. And I know I have to restrict it to 2. So the question 2 is, how does your management bandwidth gets impacted, due to this pain? It's a different time zone, different culture. So how are you thinking about it?
Okay. The top line 600 crores. We are targeting a top line of 600 crores combined both entities. The other company is already doing close to 200, and we should be doing close to 400 in the next year. So roughly we are targeting 600 crores. We are funding the company with the working capital as well. In the long term, we have an idea to raise some working capital again from the market, but it's not it's still in the forecast. It's still not clear on when we have planned to do that. So this will help us grow our top line in both the countries. And we also want to, it's a new company. Probably in a year from now, we'll be able to use the local Spanish banks as well to fund extra working capital for the company. So I think it's a good platform here on to do the requisite numbers. As on the bandwidth, we have a very good team there. This bankruptcy helped them at least to remove the legacy costs, basically. As I mentioned, they have a problem of legacy costs. So now it's become a thin line of people working now, just as required to produce olives enough. We are trying to take 40% of the production to India, which will help us grow our numbers as well. So this reduction in number of people, concentration on olives, and dependence on the export market are very good platforms to turn around the company. I've done the numbers. They make real good sense. Sooner or later, we should be able to turn it around and make it a success.
Excellent. Good luck, sir. for the acquisition.
Thank you.
Thank you. Next question is from Mr. Tejas Khandelwal. Tejas, you can go ahead and ask the question.
Oh, hello, I'm audible.
Yes.
Yeah, so I was going through your H1 FY26 results. So the volume has grown by 45-50%. But if I look at the top line, then top line has hardly has grown by 29%. So are we facing any correction in the realization?
See, in the last 1 year since Trump has come in, a lot of shipments to US have dropped for the export market. This has shifted and brought down the cost of freight by a great 10-15%. So this has brought down the cost of the product. So when we charge our customers, we have to charge including the freight. So this correction of freight from about 2,500, 2,400 to about 1,200 is a drastic drop, which was never expected. So this resulted in growth of more. We've done the quantities which we are supposed to do, but there's a price correction on the freight part. So yes, that's the difference.
Okay, got it. And sir, for FY27, what would be the blended EBITDA margin excluding other income?
It is too early for me to compute on this. Probably in my next investor call, I will be able to give you better numbers. Yes, but we are trying to ensure that the Spanish unit closes at around 8 to 10% year on year.
So, okay, can you give the guidance for H2 at least, second half?
H2, we don't
Excluding
have
other
much
income.
business from the Spanish unit because it just has about 3 months of business. Their financial year ends in December and we are acquiring only in January. So we will have somewhere around 3 months of business and it will not cost much of a number difference. We are confident of achieving similar numbers or higher numbers compared to last year.
So, can we look at 14% on blended basis for FY26?
I don't have the blended number as of now. Probably in my next investor call, I'll try to give you better details.
Okay, sir, got it. Thank you.
Thank you. Next question is from Mr. Ashish. Mr. Ashish, you can go ahead and ask the question.
Hello,
Yes.
am I audible?
Yes, Ashish.
Hi, Junaid. It's really motivating to listen to you. Thank you for this. And this Spain acquisition, yesterday the notification was not detailed, but after the call, we got good clarity. And I think it's a good buyout for us. So I have question on that front only. So we are acquiring all the things from Spain. And what is our plan? So plant will be there. So you said olives will be produced there. Everything related to olives will be there, remain there, and their gherkin portion will be produced from India, and they will be supplied through India. Is this correct understanding?
The gherkins which they are doing, as I mentioned, is about 40% of their revenue, which will be produced now in India. We were the previous suppliers of industrial packaging. Now we will be doing white labeling for them in their brand so that they supply to the supermarkets directly.
Okay, and in that, I think our margin will also increase because we will produce in India.
Yeah, Indian margins will improve, yes. And for them, yes,
what
for them, the
about
cost will come down.
Yeah, and for olives, let's suppose they have like 40% facility available for more olives. So what will be our plans for that olive? So we will produce that in there only in the Spain, and then through white labeling we will sell.
We will export it. We are keen on exporting those 40% capacity to the rest of it.
Okay, got it. Thank you.
Thank you.
And one more thing, so can we like since it is D2C brand and we have a business in Spain, so and the companies exporting also, so from their brand we can sell our gherkins from their brand. Is this possible?
That is what we are going to do. That is the plan.
Okay, great.
They've always
Thank you.
used Indian gherkins to sell their brand in Spain. Now they will use their brand. They will use, entirely India. No.
And you said it is not a big, so although valuation is not clear, but it is not much valuation. So there is no external fundings we need from market,
we are
only
raising,
debt.
No, we will be raising debt from the banks and some internal acquisition accruals will be there. We are just buying off the assets. We are not taking any liabilities. We are probably taking over a mortgage. So it's not much of a value. It's a very decent cost acquisition. And we'll be acquiring raw materials so that we run the year smoothly.
Okay. Thank you.
Thank you, sir.
Thank you, sir.
Next question is from Mr. Akshay Jawahar. Mr. Akshay, you can go ahead and ask.
Yeah. Am I audible?
Yes, please.
Yeah. Thank you. So majority of the questions have been answered, but just one generic point. But is it possible, like, would you be considering a sort of a business update on a quarterly basis? Like currently, we put out numbers every 6 months, but while not a formal disclosure in terms of how the business is performing, given that we are going in for the Spain acquisition as well, it might be helpful to better follow how that is playing out. So is that something that we can consider doing?
We are looking at, yes, we are looking at it.
Okay. All right. Thank you. I think all my other questions are answered. All right. Thank you.
Thank you.
The next question is from Mr. P. Nadella. So you can go ahead and ask the question.
Hi, so congrats on the good set of numbers. I just had a quick question related to the acquisition in Spain. It is mentioned that you will be executing this through a special purpose vehicle. Will the special purpose vehicle be converted into a wholly owned subsidiary of the company?
Yes,
and I believe it is also a related party transaction. So is it being conducted at an arm's length basis?
It is being disclosed, and I think Freshara will be 100% owner of the subsidiary. So
Okay.
there's not much of a related party interest on it.
Okay, understood, sir. And my last question is with regards to the exports. I see that 35% of your exports are currently headed to Russia. Do you see that as a strong and sustainable market, or do you see any sanctions risk upsetting that business? Because we are seeing there is a slight policy change in the Indian government stance as well, given the pressure from the US.
Since the wars, since all the pre-wars, this particular product has not been under the sanction list. So it's been a very clear product. Russia is one of the largest importer of gherkins, and there's a very large requirement, and we happen to cater to the top 10-15 customers of Russia. We are there everywhere. So I mean, if at all, in my previous meeting, I've mentioned that if at all the war stops, it helps me expand my Russian contribution to a lot more. Very good customer, very decent paymasters, and sanctions aren't a problem. Banking was a challenge, but now it's sorted out. There are different solutions to it. We get paid in rupees now. We don't have to worry about the Russian currency. So it's pretty stable. The prices are fixed. Sanctions don't really hit us, and we are able to do more. So we are pretty confident on this part.
Understood, sir. Thank you. Thank you for your time.
Thank you. Next question is from Mr. Suyash Mantri. Mr. Suyash, you can go ahead and ask the question.
Hello.
Hi, Suyash.
Sir, I have a follow-up question. So the business in Spain, the gherkins business from there will get it into India and will produce here, correct?
Gherkins are grown and produced in India. Now it will be bottled, white labeled from India. So it will be an end-to-end product.
Okay. That was my question. Thank you.
Thank you. We have a question from Mr. Afi. Yes, sir, you can go ahead and ask the question.
Am I audible?
Yes.
Yeah. Thank you. So this is a question regarding the US tariff. So the US tariff kicked in like a couple of months back, and there were an expected deal to be signed on November, which didn't happen. and you also export very less to US. What is the impact so far on Freshara in terms of export to US? And second question, the Spain acquisition. So is it like, you could use that as a intermediate destination? From there you could ship to US the product that can be shipped from India that can go via Spain? And second thing is, like, there were some 200 items that were removed from tariff recently. I understand Gherkins is not part of that 200 items. Is there any other product that is actually been waived off this tariff?
No. So their tea became expensive, so they removed the tariff on tea maybe. But it's just on a day-to-day basis, it keeps changing, but Gherkins is not a part of it. US is a large market. Fortunately, through the months, we didn't have a great exposure. We've not had a great exposure to US in the past. This year, we've had a good order from them, and the offtake has been slow, throughout the industry. Now they have run out of stocks. All the customers are run out of stocks, so there are no cancellations at all, and the products have started moving off. So it gave us a 2-3 month break, but since we don't have more exposure than 5%, we just retained the inventory, and now we are shipping it off. The customers in US are almost out of inventory, which gives us a good position for the Indian exporters in the coming year to normalize. Plus, everybody is expecting the tariffs to drop. Hope it drops soon. The idea of shipping to Spain and then to US is not right at the moment. There are companies who've tried that, and they have faced tariffs again. So we are not in that necessity. And again, the tariffs is a temporary situation. It does not require any effort which can hamper the company's name itself. So we don't want to do that. From Spain, we have an opportunity to do olives. We are looking at the Spanish unit to do more olive exports to US. I think we'll concentrate on that. We have spare production capacity there. Indian gherkins to US, I think they're still moving. We don't have a major issue. But yes, when the tariffs drop, it should start flooding. I mean, the growth should be higher.
Thank you. Yeah, that's all.
Thank you. Next question is from Mr. Churchill. Mr. Churchill, you can go ahead and ask the question.
Hello, am I audible?
Yeah.
Hi, so thanks a lot. Just for clarification, from the Spanish business, we are going to do 40% export of olives, right? And the 60% will be sourced localized. Will we sell locally, right?
Right.
And what will be the margin difference, like 40% of export and selling local?
See, export would fetch somewhere around 15 to 20%. Domestic would fetch somewhere less than 10 or 8%, because domestic market is very competitive, and we want to be trying to sell at profits and not at lower prices. So as we expand our global market share, we will try to increase increase the percentage of exports done by not letting out the local market. So once export overtakes the domestic sales, I think we'll be in a very decent position. Volumes will grow, and that will contribute both ways in good profit margins.
Great. And like we are doing 100% export of gherkins?
Yeah, 100%.
Okay, thanks.
Mr. Tejas, you can continue with your question. Mr. Dinesh?
Yes. Okay. Thanks for giving me another opportunity. It's not a question as such, but once this deal acquisition is over, I request or suggest we can have another IR call where you can explain, the structure, benefits and all that.
Sure. It's a on the overlook, I'll just tell you, it's a very simple structure. As I mentioned, there are no liabilities involved in it, and it's a very affordable acquisition. And majorly, we are investing into the raw material. So in any agri industry, the raw material is probably more expensive than the asset. So it has a turnaround time of only roughly, I think, in my assumption, not more than 3-4 years. So it's a very good plan in progress, and we'll come out with more details.
Yeah, we definitely look forward to that, sir.
Sure.
And thank you and all the best.
Thank you.
Next question is from Mr. Vishal Shah. Mr. Vishal, you can go ahead and ask the question. Mr. Vishal, you can unmute yourself and ask the question.
Sorry, am I audible now?
Yes.
Yes.
Yeah. Thank you for having me again. Just wanted to know, is the management considering giving dividend to shareholders in the future?
It's a talk in progress, and we'll discuss in the future meetings.
Okay. Thank you. Thank you, sir.
Yes. So Mr. Balakumar has no questions, I guess. We'll take one last from him. Mr. Bala, you can ask.
Yeah, I'm there. Just one follow-up question on the acquisition. So you said the acquisition is done only for the assets. So, but we are also getting the brand here. So that is one doubt. And you are also given the margins, what they make on exports and the domestic sales. So that is the current margin or the margin you envisage after you take over? Because if that is the current margin, I mean, I understand because of family dispute or other reasons, the bankruptcy was filed. But if that's the margin, what could be the reason for discontinuation of business? Yeah, that's it.
Yeah. See, basically they are competing against local supermarkets and local brands, and they've kind of supplied all products. Some with margins, some without margins. They have not capped. They've just gone into volumes, and the legacy issue has been plaguing them for 2 to 3 years now. Every year, one of them has left, and somebody who's not knowing the business has taken it up and run. So it has totally collapsed the system, and I think it was a fall which was expected in, I think, more than a year now. So we were anticipating it, and it happened. So when you cannot deal with loss-making products just for the sake of continuity, it doesn't make sense. So now they've kind of flushed out everything. There are contracts which they need not supply at all, and they are doing too many SKUs which they don't have to do because some are not even making money. But there are 60% or 70% of the products which make a decent amount of margin. So and these products have made margins. The others have kind of toppled them. So the talk is that we don't want to continue with the negative margin products, and we want to only continue with the best products and not compromise on profits. They were not very keen on profits at all. As I mentioned, it's a family business. They had properties, they had a business to run. For us, it's a different thing. We are more aggressive. We want to make money out of a business. We don't want to just run for the sake of running it. And we are focused on exports. At the same time, we don't want to discontinue what they're doing, and we want to fine-tune it by taking in our experience and our business acumen. So I think I'm expecting it to achieve those margins which I've told you. As I also mentioned, that 60-70% of their products are profit making. The remaining are loss making. So this bankruptcy helps us flush out legacy costs, helps us flush out the people who are not needed or who are a burden on the setup itself. So all this is possible only in a bank, for a legacy company in bankruptcy. So it cannot happen on a daily basis in Europe. So this is helping us to come up with a platform which is very good and which can now treat as a virgin company and take it off from there.
Thank you, sir. And the question on assets. So you mentioned you were acquiring assets.
Yeah, we are acquiring.
But we are also getting the brand.
Factories, machines, and the brands.
Understood, sir. Thank you, sir. Thank you, ma'am.
So we still have a few questions in chat box. So it's from Yanshu. Since Freshara now has access to the Spain production unit, does the company have any plans to launch its own branded olive products using this facility and enter the premium oil market under a Freshara label for existing customers of Freshara?
There is a very good opportunity. Today, Freshara and the bought out company, both are Freshara. So and their brands are already globally recognized and registered. So we will try to launch their brand in their products and our brands in our products. So we will try to work side by side, thereby potentially growing both brands and both companies. There is no reason to take over their share of the market because it's going to be our company at the end of the day, and a lot of shakeup will result in a lot of marketing costs. So it's the best idea to continue the best things what they're doing and to avoid what shouldn't be done.
Okay, and will we see any number from Spain company in our upcoming H2 FY26?
There should be 3 months of revenue which will be shown in the this year's balance sheet. We are looking forward to it.
Okay, and Mr. Vinay wanted to know the order book mentioned is around 90 crores. So would we able to grow India revenue standalone to around 320 crores, or does it include the Spanish company revenues of QCO as well?
The 92 crores is good enough to reach 325 because we are very close to the 200 mark, and on a daily basis we receive orders. It is accumulated order value which we have told you on a particular date. We have orders coming on a daily basis. We had to have a cutoff for the order book which we have told you. So the order book is for 3 months to 6 months. So we have as every month we ship about 30 plus crores of exports. We also add about 30 to 45 crores of orders. So it's a running order book.
Okay. And Mr. Amit wanted to know, based on your earlier commentary, is it correct to understand that Freshara is targeting around 325 crore top line in FY26 and potentially 600 crore in FY27 once the Spanish subsidiary revenue starts contributing while maintaining current profit margins? Is this the guidance or the internal target we should be working with?
See, the current year we are trying to close at about 300 plus 325 crores. We will not have more than 3 months of the other company's balance sheet, which will be extra. It is not added in this. The next year, we are looking to scale Freshara to close to 400, and about 200 plus 200 should come from the Spanish unit. So 600 would be combined, as you mentioned. We will try to efficiently organize the Spanish company. Our first target is to set things right and make it profitable, and from there on make it sustainable and try to, if not achieve Indian levels, at least close to what we look forward in India. So for them, it's, as I mentioned, it's more of a business success, not of business numbers. We are very keen on those numbers, and once efficiency and localization of production kicks in, I think we should be able to come out with this number.
Okay, and Mr. Ravindran wanted to know what is the plan to increase the raw materials, mainly gherkins. Any plan to increase the farmers in coming years?
Increasing farmers is a continuous process. It happens on a daily basis, seasonal basis, monthly basis. So we do not stop on acquiring farmers because they are our source of raw material. And as our company has longevity in the business, the farmers themselves prefer to work with us because we ensure that we are one of the best farming companies in India. We ensure that proper servicing is done to farmers. We ensure that farmer profitability, yields increase. Lesser hard work and more of technicality is now introduced so that the farmer can benefit. Even if the acreage is less, the farmer can benefit from the crop. So thereby, farmer increasing is a necessity, and that's what we do on a daily basis.
Okay, so we have covered majority of the questions. Thank you for providing valuable insights and guidance, and thank you to all the participants for joining the conference call of Freshara Agro Exports Limited. We truly appreciate your time and continued interest in the company. For any further queries or clarifications, please feel free to reach out to us at info@akmiladvisors.com. On behalf of Freshara Agro Exports Limited and AKMIL Strategic Advisors, we wish you all a pleasant evening. Thank you, Janet sir. Thank you all.
Thank you. Thank you, everybody. Thank you.